Hey, what's happening, guys? Dan Darrow here from Options in Play. Today, I'm going to talk to you about something that might seem pretty simple if you thought about it, but for a lot of people, they don't really take this like a step further. All right, and moving averages, a really like building block concept of trading, right? Technical based trading revolves around moving averages. It revolves around different, possibly different setups revolving whether it's stochastics, right, Fibonacci's, candlesticks. But moving averages really are probably one of the more closely followed technical indicators, right? On a day-to-day basis, I'm sure you're probably familiar with the ones I use. Just quickly to go over it, I use the 8 EMA, which is the green one. Pink one's the 20 simple moving average, 50 simple, 100 simple, and then 200 simple, right? And those are really like the five main moving averages I focus on intraday and a daily basis. And a lot of my trade ideas revolve around those five moving averages, right? Now, the problem is when you have like these really sharp moves higher or lower, more specifically lower right now, you'll notice that what I have up here is Intel. It literally burned through all of the significant moving averages. So a lot of what I look at, like for trade opportunities, is kind of out the window, right? And for some of these, you're thinking, like I still potentially want to trade these or possibly get involved in these, but now that it's lost these really key moving averages, what do you do? Um, well, like I said in the start of the video, it's kind of like a simple idea when you think about it, but it's more changing the time frames, right? So instead of looking at the daily, what you could do is you could flip the moving averages. I still like to use the same ones. So like the 8 EMA, the 20 simple, the 50 simple, the 100 simple, the 200 simple, right? So instead of measuring daily periods, now they're going to measure weekly periods, right? So then what that does, that gives you like a whole kind of range of like new levels to kind of focus on, right? But what's important to remember is when you shift your time frames, so when you go, so like for some people they trade maybe like 5 minutes, 15-minute, 30-minute charts, right? So like they're using these moving averages for like very short-term oriented trades, right? When you use the daily, then your focus is more on like 24-hour, maybe a couple day trades. And what you really want to remember is if you're shifting your time frame now out to weekly or even potentially monthly, which is if you really want to go out even further, right? So you could do monthly, right? So when you start shifting your time frame, then you have to make sure that you're shifting the time frame of the contracts, right? So if I'm looking at Intel's, for example, and using weekly moving averages or weekly charts, right? Then short-term option trades probably wouldn't make a whole lot of sense because I'm basically designing this trade off of a weekly chart, right? So this is something where I really want to base my trade. I really want to base the time frame of my trade based off the chart, and that means like 2 months, 3 months, 4 months, maybe even longer, right? Because again, it's based off like a longer time frame, and like this type of trade probably takes longer to develop, right? So if you're running out of moving averages or you're starting to like lose some of like the key levels you like to focus on, try shifting the time frames, right? That might help you get some more levels. But again, when you shift the time frames of your moving averages, you got to shift the time frames of the trades to kind of compensate for that. All right. So if you like these videos and you're looking for more information on options trading or more information on options education, please follow up with the link in the description of the video for more information on options in play. All right. Have a great night, and I will talk to you all soon.